Welcome, folks. I want to do another video on Ayro and walk you through our price target and analysis so that you can understand the process, the methodology, and how we come up with our price target, but more importantly, the research and the analysis behind our approach. If you're an analyst in our program, this is going to be another great lecture in how we apply the technical skills and how we also exchange ideas and validate if these are investment worthwhile pursuing so that you can assess the risk in evaluating these businesses. So with that being said, folks, let's dive right to it. All right, so the first thing to notice in this slide is the Y price spread bar that you see right here. This is actually this week. And it's in part due to their most recent third quarter earnings report, which was positive and better than expected. And it came on the radar of one of our analysts in the program, actually Julio, brought this idea to our attention. And then we started to apply our process. We started to apply our steps in performing due diligence, the research, the valuation, and assessing the overall risk and to see if this is an opportunity worthwhile pursuing. So one of the other important points to note on this chart is that there is resistance around $8, these inflection points. Notice that every time the stock hits this price zone, the stock declines. The stock declines. So now, is there enough validation? Is there enough reasons for the stock to actually break $8 and continue higher? And if so, what is the potential price target? And that's how we apply our process. So let's go through that. So in terms of steps, the first thing we did after this stock came on our radar, we visited the company website. We evaluated the business. We learned their product and their services. Is there a demand for it? Step number two, we went and looked at the press release. How did they perform in their most recent quarter? Did they raise capital? What about their estimates? Step number three, financial due diligence. How's the balance sheet? How's the income statement? Do they have enough capital to meet their scaling in the production of their vehicles? Do they have enough capital on hand to expand the business? So this is part of the process. You're becoming more of an investigator when you're going through this. Step number four, perform valuation and technical analysis. Step number five, Google News Run. How big or what is the demand for electric vehicle market? And actually right now it is a very hot sector because of the growth in the capital that is being spent or the influx of capital that's being added to this industry. And step number six, entry, price target, stop loss, and then what is my risk reward? So this is the entire process that we applied when we started to evaluate this business. And then we're going to walk you through the slides to show you what that actually looks like. So let's continue. So here is a brief overview on the business. What you're seeing right here is a snapshot of their website. So you could go to their website. You can actually watch the video of the facility and just familiarize yourself a little bit about the business. But let's just cover the overview and give you more of a description of what it is that they do. So Ayro designs and manufactures compact purpose-built automotive-grade electric vehicles. Our best-in-class, versatile, sustainable vehicles are used as part of a fleet on university and corporate campuses for commercial and urban delivery and many other applications. Okay, so I already see that this is similar to the company we covered yesterday, which was Arcimoto. If you haven't seen that video, I recommend that you go back and watch it because it has a tremendous amount of information that will improve your understanding of this process. In addition to that, you can see that they are focusing also on climate change. Okay, look here, the trend, what they're mentioning on their website. Efficiency and sustainability are key long-term drivers supporting zero carbon footprint initiatives in higher-end corporate and government entities. Full-size work vehicles have a hard time assessing certain areas like universities, stadiums, business, industrial parks, and resort path, and so on. So you're already seeing that this is really on the backs of climate change, sustainability, environment-friendly vehicles. So this is the same theme, the same thesis that we saw with Arcimoto, and this is definitely a competitor to Arcimoto. Now, Ayro came about through a successful merger. You see right here is a merger successor discussed below. This is actually coming directly from the company's SEC filing. So you could go to the 10K or the 10Q and learn a little bit more about their merger and how the company came to be about. Now, in terms of products, they have two products: the Club Car 411, which is an electric light-duty work truck, and then they have the Ayro 311 electric three-wheel delivery vehicles. Very similar to what we saw with Arcimoto. Now, this slide displays the product that the company is actually selling. So here's their light truck, and then here's their three-wheel electric vehicle. And then, of course, it has different types of applications and purposes, as you can see over here. Again, you can get more information on their website. So I'm illustrating you so that if you're actually interested in learning more of the business, we have already identified what the product is, and just makes it a little bit easier for you to follow. Now, we also went and looked at the press release, right? Their most recent quarterly reports, Q3 highlights, revenue, $388,000 up for the quarter. They generated a net loss. But here's what's important to understand. They finished the quarter with $27.9 million in cash, which is in part due to their $24.2 million in gross equity raise, okay, which should be significant working capital to expand, pay their labor force, pay their rent, buy the supply, and again, allows them to manufacture their vehicle. In addition to that, they established strategic partnership, engineering and design partnerships with Karma Automotive and customization center that is targeted at having a capacity to deliver 20,000 light trucks and electric vehicle over the next 3 years. So this 20,000 delivery is estimated to be approximately 300 million. Okay, so can we do a mini model around this? Can we do our own estimates to see if this is actually feasible? Can they actually achieve this? In addition to that, they completed expansion of Austin manufacturing facility from 10,000 square feet to 24,000 square feet to increase production capacity from 200 vehicles per month to 600 per month. So that's essentially increasing by a significant amount from 200 to 6,000. So now they're increasing production capacity, which means that revenues will increase, which means that the business can also scale, and they have funding behind them as well. And again, these are the things that you need to do as an investigator to see if this is a viable business. Is this a business that has a high risk? Or is it a business that doesn't have a viable product? It's essentially, for lack of a better word, a scam. This is what you have to do to protect your investment when you're making decisions and evaluating businesses. Now, let's take a look at the financials from the third quarter. You can see here for the 9 months ended September 30th, when you look at 2020, revenue, 821,000 compared to 745,000. I think they're gonna end the year with approximately 1.2 million in sales for 2020. And of course, because they moved to the new facility, they have a 600 maximum production output, as they stated in the previous slide. I think that this number would definitely increase. I think next year they might have several $1 million in revenue. And we actually built our own preliminary financial analysis to illustrate that. Now, when we look at the balance sheet, here's their cash, 27.9 million, which represents the equity investment that they did during the quarter. So they ended up raising capital. Also, their property, plant, and equipment is 812,000. So they doubled that. So this leads me to believe, okay, so that they moved to a new facility, there's capital behind it, and their asset value is also increasing. Very, very important. In terms of inventory and raw material, 1.5 million, and I expect this to continue to increase over the coming quarters if they're going to be scaling and begin to produce and deliver between 200 and 400 monthly vehicles. Now, let's look also at the manufacturing facility. Now, they provide a video on their website where they're walking you through it, giving you a tour. And I also went on Google and did some search just on the location. And you can see right here that their location is actually in Austin. And they previously were subleasing a 10,000 square foot facility. And now they relocated this year to Settlers Crossing Business Park, 900 East, Old Settlers Boulevard. This is approximately 12,000. Yeah, and this is what it is. You type that address on Google and you go to images, and this is what you get in terms of the facility. But they're already in there because, again, they recorded the video and they started to show what it's looking like. So based on the graphics, based on the videos, it shows that they have boots on the ground and they're actually executing on their business. Now, in terms of some agreements that they have, I found this information on their SEC by looking at the 10K. And in terms of manufacturing, okay, who is supplying them? So they have a manufacturing agreement with Centro Automotive Group, and they're essentially providing them a lot of the raw materials and supplies. So I went and Googled these guys, and this is their website. This is a Chinese-based company that I believe is supplying not just Ayro, but they're supplying other smaller electric vehicle competitors. And here's the type of models that they are providing. So you could Google them, go to the website and check them out as well. Now, in terms of agreement to selling their vehicles, they actually have a master product agreement with Club Car. And you go to Club Car website, okay, and you can see what Club Car is selling, but right in the middle image is Ayro's product. So now they're selling through Club Car. Okay, so it's important to know who's the supplier and how they're selling their vehicles and how they're gonna distribute those vehicles. So this partnership agreement with Club Car needs to be effective. Club Cars needs to execute on their part in order to help Ayro generate significant revenue. Now, if we see right here, as of January, May, Club Car, let me clear this up on the screen. Club Car successive 1 year period upon 60 day prior notice, refusal for sales of 51% or more Ayro assets, equity interest. Okay. So here's the remaining of that agreement that you can read, or you could pull it up on the company's 10K or 10Q, most recent 10Q, so that you can go through this yourself and make up your own judgment, and draw your own conclusions as well. Now, in terms of our price target and our analysis and valuation, so we came up with a $18 price target, okay? And we first looked at the facility and can they actually produce 20,000 vehicles over the next 3 years? So we looked at Tesla Fremont factory production output just as a benchmark. So their Fremont factory is 5.3 million square feet facility and has the capacity to produce 500,000 Model S and Model Y per year. Now, assuming the same number for Model S and X, the output would be 1 million vehicles per year from that particular factory, which means a 5.3 square footage is required per vehicle. Now let's do this for Ayro, okay? They're saying that they're gonna be producing about 20,000. So we're gonna assume that in the first year of operation, can they deliver 4,500? So that's 10 hours a day times 6 days per week times 52, that equals to 1.4 vehicles an hour. And if we assume 8-hour work days, 30 days a month, 4,500 divided by that gives you 1.5 vehicles. Okay, so this is just us trying to understand and give us a rough estimate of how many vehicles are they producing on an hourly basis. And if we also look at Ayro's facility of 24,000 square feet, and we applied the same methodology that we applied to Tesla Fremont factory, we would assume that 4,500 vehicles per year, okay? We'll take the 2,400 divided by the 4,500 of vehicles produced, gives us 5.3. That's exactly the same number we got for Tesla. So it's doable. it's doable on their part. And by the way, I want to give a shout out to Michael, who helped us come up with this calculation as we were doing our analysis. So thank you for this information, Michael. So for year one, I'm going to assume that they might sell 4,000 units at an average 4,000 units broken down into both of their models, 1 and 2. The average sales price of Ayro 311, I'm saying approximately 12,000. This is public information that you can find. I actually included the links down below in the video description. And then their club car 411, we're assuming a sale price of 15,000. Okay, then how many units they're gonna sell? 2,800 for Ayro 311, and then 1,200 for the club car. This is percentage of production, 70%, and 30% of the entire 4,000 units. Okay. So that gives us an estimated net revenue of 51.6 million for next year. Then follow that for 2022, potentially manufacture 5,500. That will bring revenue to 70 million. And then for 2023, 10,500, that will bring revenue to 135 million. This is almost, it's below, but it's almost in line with what the company had projected of 300 million in terms of what they wanted to achieve. So if we assume that they would achieve in 2022, right, once they become more efficient and they are utilizing their production capacity at a much higher level, let's assume that they do manage to produce 5,500 vehicles, which would equals to 70.9 million in revenue. Let's apply an industry multiple of 8 times. And if you want to know more about this multiple, watch our Arcimoto video where we explain comps from utility motorcycle vehicles and then 4-wheel traditional electric vehicles like Tesla, Neo, Li Auto, and then of course our video on Arcimoto, because we explain on the sales multiple and how high it is for some of these companies. So for Ayro, I'm going to assume 8 times multiple. So if you take the 8 times and you multiply it by their revenue, okay, right here, this is now in thousands, okay, so 70.9 million times 8 times would give us an implied enterprise value of 567 million. We adjust for total debt and their net debt. We extrapolate that to arrive to equity value. You divide your equity value by your shares outstanding, and you get an implied share price of $24.45. Now, this is risky. I have to give it a discount factor to it. I'm assuming a 15% discount on that $24.45 implied price target, and my newly adjusted discounted price target on this business becomes $18.49. And I just rounded to 18 as you see up here. That means that the stock can potentially increase from yesterday's close of $6.18, almost 200%, folks. And you're seeing how I'm coming up with this analysis. And this is just back of the envelope calculations. Now, I might be wrong. Let me repeat that. I might be wrong with these assumptions because that's what there are. They're estimates based on the information that management and the company has given us. And myself and with my team of analysts, we are evaluating to see if this is potential, if this is possible of it being achieved. I think there is a likelihood that it is possible. And even with my 15% discount factor, because again, this is risky, I still get an $18 price target. Okay, so I think from a risk reward standpoint, it is an investment worth pursuing, and it's an idea that I would execute in my portfolio just to validate it, just to see what happens. Let the idea materialize. You have to give it time for it to play out. So this is how we came up with our price target. And again, this is a company, let me repeat this. This is a company that has no analysts, no sell side coverage. There's no information or no projection. So we have to apply our best efforts in estimating what revenues would be, and then using sales multiple to come up with an implied share price. Again, going back based on the information provided on the most recent quarterly report, okay? Now, in terms of the overall market, well, this is a slide that we discussed from Arcimoto in a previous video yesterday, where it stated that the electric vehicle market sales of 2.5 million vehicles in 2020. This is expected to grow to 31.1 million in 2030, implying a 29% compounded annual growth rate. This is a sector that by 2030 could be worth almost $1 trillion. Look here, by 2027, the electric vehicle market, 802 billion. I think that this market will be worth $1 trillion over the next 10 years. And this is why there's so much capital flowing into this sector. The bigger picture is low emissions. This is all related to sustainability, environmental friendly, sustainable businesses to address climate change. And you're seeing the private sector coming up with solutions and products to tackle global warming. And if you want to know more about this, go back and watch our video on Arcimoto. And again, the links to these articles are right below in the description. Take the time. It takes a few minutes to read it and familiarize yourself on what's happening with the electric vehicle market, because this is a trend that's going to last for the next 5 to 10 years. Okay. And this is why it's a hot sector as well. But you need to do your due diligence and make sure that the companies you're coming across are viable businesses. In terms of who they're trying to target from an industry perspective, this is coming directly from their website. Education, corporate campuses, hotel, resorts, food and beverage, retail, and government. Okay, so they're definitely tackling multiple industries. And I can see that there might be the demand is there for their vehicles, especially coming from government and education, if they have already test pilot their products and it's being used on college campuses and in corporate campuses as well. Now, in terms of execution, how do I see this playing out, or what is my game plan? This is my action plan. You should come up with your own. My entry is $8.18. I have a stop loss of $6. My projected price target is $18, which represent 120%. My time frame, 3 to 6 months. Sometimes it may get there a little bit quicker, and then you start taking profits. But from a risk reward standpoint, I'm risking 2 points, okay, to make 10 points. That's a 1 to 5 risk reward ratio. I like those odds. This is a trade that I have actually taken in my portfolio, and it represents between 5 and 10% of my entire portfolio allocation. You're not going to put in 50 to 100% of your portfolio, because this is a highly risky business. Remember, this is a market that is hot and more players are coming in, but they're not all going to be successful. Some of these businesses will fail. I just walked you through my process on finding companies or investing in companies that have a higher probability or chance of succeeding. And I think this is one of them. But don't take my word for it. Do your own homework. Make your own decision. This is about making you independent and walking you through the process. And if you like what we're doing, take some away and internalize it. Make it your own. And then you can invest following your own risk parameters, your own personality, and your own risk tolerance at the end of the day. And of course, from a technical analysis perspective, the price target that we arrived was $14. So on the technical side, $14. On the fundamental side, $18. Plus I gave you an execution game plan. All right. And again, if the stock rolls over and comes back to 6, I'm out. But if it moves higher again, I can always reevaluate, provided that it breaks $8, because we have an inflection point here. Yeah, we also have an inflection point right here. So I could just round and say that $8 is the main point of resistance. All right. And lastly, what did we just do? I just walked you through the process. The idea generation, electric vehicle. This stock came through my desk from one of our analysts in the program. How did he find it? 52-week highs and percentage gainers from the day. You could go to finbiz.com to see that list and then do your own due diligence. And of course, you have to be selective. We did our own fundamental research. We looked at sales growth, their products, and we estimated what that can be. We talked a little bit about the market size of electric vehicle. In terms of economic related data, GDP and unemployment, you could do your own research on that. Technical analysis, we looked at support and resistance. We came up with a $14 price target on this. Trade execution, entry, $8.18. Potential price target, $18, or my sell price will be approximately at $18. I might actually take a little bit off the table as it gets close to 18. If it gets to 16, 17, and 18, From $16 to $18, that's where I'm going to start taking profits. Stop loss, apply risk management, $6. If it hits $6 from my entry, I will exit the position, cut my losses. Capital allocation, 5 to 10% of my portfolio weight. Folks, internalize this methodology, learn this process so that you can do it on your own, and don't follow me blindly. Don't depend on me. I want you to learn this process. Feed a man a fish, he'll eat for a day. Teach a man how to fish, he'll eat for the rest of his life. That's what we're trying to do here. So with that being said, take care, stay safe, stay healthy, and I'll see you in the next one. Hope you enjoy and found value in this. Take care.